And welcome to another episode of Business in the Know. I'm Mike Walpert with my host, Paul Benton. Hello, Paul.
Hey, Mike.
And we have a great guest today talking about taxes, how things are changing, how things are working, what 2021 looks like, and the three most important things that you have to know coming up for tax season in 2021. Paul, please introduce our guest, Chris.
On today's episode, we're in for a treat. Chris Frederiksen has been practicing accounting and tax for 30 years in the Bay Area. He was one of the youngest partners at a Big Five accounting firm. His practice focuses on small business and entrepreneurs and people fortunate enough to IPO on how to minimize their tax bill. He was also, fun fact, the highest scoring CPA graduate in his year of taking the CPA exam. It's a real treat to see you here, Chris. Welcome to the show. Tell us, what are the important things going into 2021?
Well, thank you, Paul. It's great to be here with you. We've got great news today because yesterday the Congress finally passed an update on the PPP situation. We've now got a new bill, $900 billion or so. And the main thing for small businesses that's in there, and I'm sure all of you got PPP money, certainly all of our clients got PPP money, but the IRS and particularly Treasury Secretary Mnuchin was insistent that this was basically taxable. And all of us rebelled at that, said that can't be right. This is like a tax refund. That shouldn't be taxable. But the IRS and Mnuchin really dug their heels in and said, no, you got the PPP money, but you cannot deduct those expenses. That's now all changed. The Congress included that in the new legislation and made it absolutely crystal clear that that's not taxable. Now that accounts for about $200 billion to small businesses. And so we're really excited about that. And I'm sure that that will impact your year-end tax planning. So now that that's off the table, now you can get with your CPA and make sure that everything is in good shape. The second thing I'd bring up is a lot of people aren't aware of this, but COVID, the rules on COVID are that if you have been working at home, or if you have any employees who've been working at home, and they needed to expend money, let's say to buy a television set so they could do Zoom, or maybe you yourself had to get some new furniture in order to be more comfortable in working from home, those expenses are deductible. So I'm actually doing it with my own employees, one of my own employees who's been working from home, who bought a new couch for his office. I'm reimbursing him for that. Tax deductible to me, not income to him. So that's just something you want to do before year end. As we go into 2021, another thing I want to suggest to many of you is we see clients coming to us and they've expended quite a bit of money for medical expenses personally out of their own pocket. But the way the tax law works with itemized deduction, you don't get much of those medical expenses deductible. But if let's say I have a small company, if I decide to become a C corporation, and let's say that it's just me and maybe my wife and maybe one of my offspring, we're the only employees, then I can put in a 100% medical plan that covers all the medical costs of every employee. But since the only employees are my family, I'm now getting to deduct all of my medical expenses. So it's definitely something you want to discuss with your CPA, especially if you're thinking that you've got medical expenses coming up. So for example, one of our clients very unfortunately had a bout of throat cancer. And when we knew that was coming, we were able to incorporate him as a C corporation and put in a 100% medical plan. And all of his expenses, even though a lot of it obviously was covered by insurance, but he also had a lot of out-of-pocket expenses, all of which now became tax deductible. So it's definitely something you want to be thinking on. Here's an interesting thing that is working its way through the legislature in California. Here's the issue. When the new tax bill got passed by Trump early in his presidency, it was really punitive to the high tax states like California, New York, and New Jersey. And what they did was they put in a rule that said a married couple cannot deduct more than $10,000 in state, local, and property taxes. So people who live in California, particularly in the Bay Area, that $10,000 gets used up just by the property taxes you pay on your home. So what that means is that the state income taxes you pay are basically wasted. They're effectively not state deductible. So what several states have done is they've said, we're going to allow you to pay your state income taxes on your pass-through entity, like your LLC or your S Corp. We're going to allow you to pay that at the entity level and take a tax deduction for it. And we don't yet have that legislation in California, but it's coming. And so that would mean that when you have a pass-through entity, you're going to be able to effectively pay tax on that income out of the entity. And so that'll save you a whole bunch of tax. So exciting times to be here.
Yeah.
We're really looking forward to 2021. Most of us believe that by mid-year we'll have more or less herd immunity. And we believe that the economy is, with all the things that are coming down with artificial intelligence, machine learning, big data, that they're going to revolutionize business. And it's going to be like a new industrial revolution. So we're excited.
That's good, useful, valuable, timely. And I hope we can have you back in the future to talk about different entities and this marvelous, prosperous future, which we both believe in, and as does Paul. So that's some great news.